Hello and welcome to ATFX's dollar yen analysis. We're going to be looking at the dollar yen and recent moves that we've seen and the fundamental drivers behind it. First, obviously, I want to ask you guys to subscribe to the ATFX channels. This will help you get extra notice of when we're producing videos like this and extra fundamental analysis on the market. So diving straight in, I think a lot of traders out there, especially in the FX world, are looking at why we've had such a sharp rally in particularly dollar yen and a depreciation in yen across other assets. So just looking at the dollar yen chart, as you can see, we've had a very sharp move down from these highs around about 162. This had a double factor, really. There was intervention, we know, from the MOF and the BOJ in Japan. Also, a big change in the direction of the dollar as the Fed entered its cutting cycle, which we're into the middle of now, and we're discussing how much they're going to cut on a daily basis. But what's really confused the markets, or maybe not confused, but taken away that downward trend we got, and we got a big move, right? We got from 162 down to the low here, it was about 139.50. And it was looking very offered, and for very good reasons, because we also have a more hawkish BOJ as well. In addition to that, what we also got was a new Japanese prime minister that had been very hawkish. And this is where things just changed for us a bit from the underlying fundamentals. So looking at the dollar side of the equation, we did start to see a little bit of turn in the dollar numbers. Firstly, with job numbers, then with inflation numbers, and then with a whole other data coming through as well, which has given us more of an indication of a soft landing, and that maybe that the Fed doesn't have to cut as hard as they did. What helped this last move down was that big 50 basis point cut from the Fed. That coincided from an underlying interest rate differential fundamental point of view with what we thought were going to be more rate hikes coming from Bank of Japan. A lot of Japanese banks over in Tokyo were pricing in 2 more by the end of the year. They've pulled back on that. And then when we hit this level actually came in as we got the new prime minister, who had been a well-known hawk. He did an about turn, a very swift about turn on the weekend after he got in. Became a little bit more sort of conciliatory, I suppose, on his interest rate outlook. And this helped and coincided with stronger US data. We're now pricing in 90% chance of a only 25 basis point Fed rate cut, when just a couple of weeks ago we were looking for another aggressive 50-point cut on the back of the original one that we got in September. This has helped this dramatic rally of nearly over 10 big figures, in fact, from 139.50 up to these levels here. Now, the important thing that a lot of traders are looking at, we have got a bit of consolidation around these levels. This is the daily chart. It's a longer term chart. RSI is just sort of topping out slightly. And a lot of traders are now considering, where do we get the next move from? So interesting week for us. No real big US data. We've got a few little bits coming out from the yen side of things, but nothing massive. So now we're going to be looking at the pure trade on where we go. We do have US retail sales later in the week. Now they're expected to come out 0.1% increase for the month-on-month data. Sorry, 0.1% for the core retail data, and 0.3% increase for the month-on-month data, which will be the headline. The interesting thing about that data, and this is a slight caveat off to the side, is you've got the ECB surrounding all those numbers coming out. Retail sales in US do come out at the same time as the unemployment claims. They have been on the rise, which has sort of pulled back on that dollar bullishness. But what we could see in the next few sessions, we've got key trend line resistance coming in here. And we are approaching, as you can see, a confluence of these moving average levels. Now, generally, we look more closely at the 200-day. That's coming in now, as you can see, at 151.15. We've got the 100-day coming in at 150.98 and the 51s. But those two coincide, should provide a decent resistance level. Plus, we've got this sort of recent highs. You could be trading off these levels and trading fairly aggressive of them. So dollar bulls, you'd be looking for a break of the recent high, looking for a break of the trend line, and then maybe for those longer term trades, looking for a break of those moving averages. For those bears out there, and I'm probably leaning that way, we have got more Fed rate cuts coming up. Yes, we may only get 25 basis points at the next meeting, so that's not as bearish as we were once pricing in, but we've priced that differential in here. And then we're going to be looking at data out of Japan and see if we get a twist. There could be the perfect storm. We had the perfect storm to move us up these 10 big figures. Could we get the perfect storm again? Something that's discussed amongst a lot of traders in the last couple of days is, as I said, we're now 90% pricing in a 25 basis point rate cut in November. We're still 3 weeks away from that. I think it's the 7th of November that it comes through. Now, interestingly enough, we were in a very, very similar situation in September. And bang, about 3 or 4 days before we got that rate cut, pricing just completely flipped, pushed us to 50 basis points. This helped with this move down. We could get a similar scenario. And I mentioned the perfect storm. If things change in Japan as well, and we see inflation numbers starting to creep up, and we see a slightly more hawkish BOJ, MOF, and even the Prime Minister, we could see this move retreat. So excellent trading opportunities at these levels. Bit of an explanation on what happened with the underlying fundamentals. It feels like we're at a point of change. The converse could obviously occur. The bulls could get what they wanted, which is a less dovish Fed, especially if numbers keep coming out stronger. And Japan sees sort of weaker numbers, and we can keep their rates at those historical lows that have been at. That would see dollar yen move to the top side. Keep an eye, though. These are the levels to trade. Buyers and sellers will both be looking from an institutional point of view to enter trades around these levels. It could be a very interesting next few days. Geopolitical factors will also be a real mover as well. We have seen them calm down a little bit more. Foreign exchange markets are reacting less aggressively when geopolitical factors are coming up. But if we do see that spark up in the Middle East, if we do see something happen, maybe even closer to Japan's shores between China and Taiwan, then expect yen buying to come through again. Going to be very interesting times ahead. If you need anything from us at ATFX, please do let us know. And thank you very much for listening.